ULTY, the options income ETF from YieldMax, that is currently paying around 84% dividends per year, weekly passive income, has changed my life. I didn't participate in the crypto craze. I never got into Bitcoin when it was less than $100 or even around 1,000. I didn't buy Nvidia 10 years ago when I probably should have, or Amazon. I've missed out on a lot of these bull runs and high flying stocks. And I'm not a computer science major, and I don't know how to really use AI to its full advantage. But right now, ULTY has changed my life with this weekly passive income. Of course, that income is not forever. It does come with a lot of risk. This video is not financial advice. I'm simply sharing what my experience has been with ULTY and giving you guys information so you can make your own decisions. Now, I got into it recently, but ULTY's been around since February of 2024. And the big question on my mind right now is, should I reinvest these awesome weekly distributions, or should I take them in cash? I'm sure a lot of other people are thinking that question as well. So I wanted to go back, test out a scenario where I reinvested from the beginning, or when I took cash, or if I took cash from the beginning, and see how those both played out. That's what I'm going to show you in this video, and hopefully give you some kind of an answer on what your returns hypothetically would have been if you invested from the beginning. So let's get to it. So on screen, I've got this just pulled from Google, and it's the maximum price chart from ULTY since inception. They're saying about $20 since March 1st, 2024, down 68.65% as of this recording, which is Sunday, July 27th. But, you can plug in these numbers that I'm about to show you. So it's down quite a lot, down $13. They're almost $14. But it's an options income ETF, so it's paid at first monthly distributions and then weekly distributions. So let's take a look at a scenario where you took cash instead of reinvesting. And again, not financial advice, purely information, just a little back testing with Google Sheets is all I've done here. I went to the ULTY website, the YieldMax website, and downloaded this table here, which shows the distributions per share, as well as the date that they paid it out. And I just created this little calculation table here. We took the IPO price, which was, I think, roughly $20.42. So assumed you invested $10,000 into ULTY, you would have gotten 489.71 shares of ULTY. And total distributions, so I summed up all these distributions and then multiplied it by the share count. Total distributions would have been this amount, $6,617.04. So on a $10,000 investment, if you got $6,617 back, that's pretty good, considering you've only held it for, a little over 2 years, if the price remained the same. But the price has not, as we showed, it's declined. So assuming the price right now is $6.28, and you could do this on your own in ChatGPT or in Google Sheets, the current value of the position would be about $3,000. So if you said, I'm done with ULTY, I'm getting out, and you sold, your total loss would be $307 because you take $10,000 invested minus, what you get back, and then you add back in the total distributions, and your net loss is minus $307 for a total return, not an annualized return, but a total return of down 3%. So not great, but that's if you took all cash distributions and if you bought at the IPO price and never bought any more. Okay. Now let's go into scenario 2, which is reinvesting. So what I did here is I took the distributions per share. Again, same table. And then roughly the reinvestment price. So assuming you were kind of on like a scheduled reinvestment, so you enabled like automatic reinvestment rather than buying when you wanted to, just reinvesting when the dividends were paid. and I took your total shares before you reinvested, and then I started adding in how many shares you would have received if you bought more with your dividend. So you get total shares after, and that just kept accumulating. So going over here, again, assuming a price of 628, an exit price, you invested $10,000, you got your 489.71 shares. You had 0 cash distributions, but you reinvested all of that. So you kept buying more shares. So your current value of your position is $8,191.97. And that means that your total shares were 1,304. So with just investing $10,000 and reinvesting and buying back more shares every time, you really like increased your share count by a lot to over 1,300. But if you sold now, you would be at a much bigger loss than if you did your cash distributions. So your loss would be $1,800 for a total or a percentage loss, total return of minus 18%. And again, the math there, I don't have the formula. You guys can't see the formulas, but you're going to have to trust me or do it yourself. You can do it in ChatGPT. That's kind of the one that helped me do this. So yeah, so it's kind of interesting because it's a timing thing, right? If you had bought ULTY at what was basically its highest price, the IPO price, right here, 2042, you're down. You're down either by taking the cash and selling or reinvesting and selling. But the nice thing is, if you, the nice thing is this, if you turned on the distributions to receive cash now, so your total share count now is 1,300. Okay, we'll just put it there. And let me increase the size there for you guys. So now you have 1,300 shares. And right now they're paying about 10 cents per share. Again, increase that size so you can see. So, I mean, I know this is simple math, but you take 10 cents per share. So now you can make, or you possibly, again, not financial advice. These returns are not guaranteed. The dividends could stop. They could go down because the volatility goes down, but potentially making $130 per week now if you turned back on the cash dividend. And, that would take, to make back your loss there, take 13 weeks or about a quarter of a year. Do a number format. Probably should have had this done before, but just quickly recapping, this is your current share count. Assume they're paying roughly 10 cents per share. So every week you're getting $130 and takes 13 weeks to make back this loss. Of course, the price could continue to go down or it could possibly go up. So again, if you had bought ULTY at the very beginning and you sold now, you were better off by not reinvesting. You were better off if you just took the cash. However, if you reinvested since the beginning and you sold, you'd be down, but you would have that opportunity to switch to cash and you'd be making a nice chunk of change there. Again, not financial advice. And I'm only emphasizing not financial advice because YouTube took down one of my videos. But I appealed that and they put it back up. So I just want to be careful and make sure that people know this is just hypotheticals and not really like, I'm not a financial advisor. Make your own decisions. But just some final thoughts. ULTY. The price decline is definitely concerning, but stabilizing. What we've seen here since kind of this, I think this was like April 2nd or 1st, with the tariffs, it's kind of stabilizing. The low was 524, and now it's around that 630 range. So that's good to see. The drip is risky because if the price keeps going down, you're not making the cash, you're not getting it back. But what we learn is that ULTY is for income, not for growth. It definitely has not grown. You could grow your position size and then switch it on to cash and get more income. But really, ULTY is an income product, and that's obvious. Income's in the name. It's an options income ETF. But in case people were wondering, and then last thing we learn is if you risk nothing, you risk everything. So at some point, you do have to make a decision. Are you going to invest or not going to invest in either ULTY or something else? Everything carries risk, but by not even taking a little risk, you assume you're just going to default to a risk where you aren't going to get what you want out of life. So that's the most important lesson as far as I'm concerned. But anyways, that was a little rambling, but that's my experience with ULTY. What am I doing right now? I am actually just taking the cash and choosing to kind of reinvest when I feel like it. I might be buying some other things later. But I kind of thought, all right, I'll buy on the X dividend date when, I think the price might go down a little bit. So I might scoop up a little bargain. And I just want to choose when to reinvest. So I'm going to be reinvesting for now because the price is low, and I'm hoping that it goes up and that it recovers. And at that point, or at some point later, I'll turn back on the cash when I really need it. But for right now, I think reinvesting will be good. You wouldn't have wanted to really reinvest all the way on the decline, but kind of at this plateau, I think reinvesting makes a little bit of sense, and I'm bullish, so that's what I'm doing. But let me know in the comments what you guys are doing, and what you like or dislike about ULTY, whether you're doing cash or reinvest, and anything else you want to see about the YieldMax suite. So thanks for watching, and take care.